All right. Start off just backtesting price action and market structure. And currently we are we should be we are on January 7th around lunchtime at the moment. So I'm going to mark out the daily chart. Nothing on the daily that I'm too interested in the immediate. Then the 4 hour. 4 hour is in some demand. Here. The 1 hour. 1 hour hit an order block as well. Nothing crazy until you get up here to this supply. Then on the 30, same thing, 15 minutes. This candle put the low in, did shift, came back, swiped liquidity, and now we're trading outside of this, off this order block. So it looks like we're looking for longs at the moment to probably come back for scalps, at least back up to here. And if we get any continuation, take this liquidity up into the supply. Would be the game plan here. All right. So I've got the daily chart, 4 hour chart, 1 hour, 30 minute, 15 minute, 1 minute, 15 second, 5 second, 1 second, all open up here on my computer. Gonna be risking 1 R will be $1,200 as our risk metric. Be looking for a minimum of 1.5 R for each trade. Minimum. If we can't identify that, then no idea, no trade. So this has already been mitigated. Swipe this liquidity. I feel like we're gonna get, we fully mitigated, filled this gap on the 15 second. We've got order block standing here. So ideally trade in here. Let's let it go for a few seconds. See how it comes back. Would like a retracement. Speed it up a little bit. All right, we took this internal liquidity here. So I'm gonna hold off. I'm gonna wait for the reaction around here and check the 5-second chart for a reaction. And mainly because it looks like we just swept this liquidity to come up and mitigate this on a lower time frame. So because we didn't come back here beforehand, there's a possibility we could just run this down lower, take out this, take out that. So I'm gonna want extra confirmation here on this block. All right, so we've tapped into it. Probably like to see it come down a little bit to right here, about 21,511, about the midpoint of this block, and see if we get a reaction there. Looks like we're just going to trade through it at the moment. Okay, came down to the wick. If we could trade above this right here, we get a change in the state of delivery here. So all right, so we did. So I would be interested in, get our little thing over here. Trade, cover this low. Enter on the top of this retracement block here. So right here. And then minimum 1.5 R. It's gonna be to this block. So that would be a scalp. I'm just gonna focus on trying to get 1.5s right now. So my trading's been a little sloppy lately, trying to capture more. So it's telling us that would be 3 contracts. That sounds about right. Yeah. So we would do 3 contracts, set a limit order here.
Order submitted.
And we'll try to take it up to this supply. Probably want to just hit the bottom of this. Now, in reality, that would be just a partial spot right here, as we are looking for longs. But we might have another long opportunity if we break above here and then come back into this again with this range. So let's see if we get tapped in here. If it takes this high, I'll cancel this order. Well, it just tapped it. Looks like it is going to take this high. Then at that point, this is internal liquidity that's been swept. I'm less interested in this because there's one magnet that's already been taken to the upside. So I'll have to reframe a trade idea. But it looks like we might get an opportunity here. Egg. Hey, Egg. Good evening, sir. How are you doing? It's been several days.
Order filled.
All right, so we got tapped in. Readjust our stop loss to that 7.5, and then we're gonna try to take profit here at 37. Let's go ahead and put that in the Excel spreadsheet here. Long on limit, quantity 3, entry price 21,517, expected exit 21,537, original stop 21,500.75, and we'll let it play out here. It's a little bit over 1R, but we're gonna focus on scalps today. I'm doing good, man. Just doing a little backtesting stream here, and then I think I might do a little RuneScape stream after, but just chilling out, trying to tighten up the trading skills here. It's been a good week though. All right, let's see if we can get a long out of here. Let's get some movement. Not looking too hot yet.
Stop.
All right, so we're starting off with a loss. Wonderful. So that is 1 minus 1R to start the session. Entry time 11:43:50. 11:44:25. Exit on limit. Exit at 2400.75, which is the same as our stop. How many points did we possibly get? We could have gotten, the highest was 21,519, so not the best. Ooh. Bitcoin is, oh, it turned back around. Of course, right when I start the stream. I was looking for a long out of this level. ES is moving up. All right, so let's take a picture. Snapshot, I mean. Save that. That's the 4th trade for the 7th. And then let's look for the next trade. All right, back to the 1 minute. All right, so that's not gonna hold up. Looks like then we're gonna be looking for lower, which means I don't want to short down here, so let's just play this out, see how we play. It is during lunchtime. London is closed, so a little slow. All right, so I went and took the low again. This looks like a little bit like a head and shoulders right here. Not really interested in it until it takes this low. So we just got a new hourly candle closure. Pretty bearish. Looks like it's gonna dig deeper into this consolidation here. Valtrazi for sure. Go ahead. Let's speed this up a little bit. I'm not liking anything yet. If this low gets taken and then we sweep back up, then maybe. We can see we turn this order block into resistance at the bottom over here. Alright. We got. Can maybe expect a long off of here. See how it trades. Alright, we're getting a little bit. We're gonna need to see this high taken out. Alright, I'm thinking it's time for me to enter the market at dollar cost averaging. I'm thinking about $100 a day and trying to be mostly safe, so mostly into SPY. Nice. Is there another ETF I should get to counterbalance a bit? Looking at holding long-term, like retirement fund holdings. Yeah. Well, obviously I can't provide any financial advice, but I could give you recommendations on maybe what I would do. But if you're already going to be long the market, which means you're long beta, so you're exposed to all the market volatility by being in SPY. In this environment, if you want to counterbalance that a bit, not a bad option is to look into the long duration bond ETFs. So that would be something like SPTL, the long government bond, or BLV, the long corporate bonds, because rates are assumed to go down over the year. So if we do get a little bit of downturn in the market, you at least get some income off those ETFs, and probably some price appreciation as yields will likely come down throughout the year as we cut interest rates. And they already have a bit, but that would be an option if you want to kind of minimize some of the volatility in the portfolio and you don't want to be fully exposed to just equity exposure. That's something that could work. If you're looking for another ETF that's similar to then of course if you want to if you want some more volatile equity stuff, you can look at the triple Qs, QQQ. But the long duration bonds, 10% into ETFs. Yeah, I mean, are you it also depends on what your overall portfolio is. Are you holding individual stocks? Do you have other stuff in alternative investments or in real estate? How much cash you're trying to hold? I mean, a safe bet is for any cash that you have can be just rolled over in short month treasury bills. So you could do. So one could also get like the short-term treasury bonds, like FLOT, float. That's a good one. That's the iShares ultra short bond, FLOT. That's a pretty good mainstay in the portfolio management world. All right, we broke this high. Let's see if we get a retracement back into here for another long opportunity. Oh, really? Yeah, well, I mean, to be fair, the market's been going down, so cash is king at the moment. At least you're shielded from that downside volatility at the moment. But yeah, dollar cost averaging in a market like this is pretty prudent, I would say. All right, if we got a retracement, I would be interested in this block right here, right on the 50% retracement. This is where I'll see if we get a reaction for a long opportunity. I'm still not interested in shorts because we have come down quite a bit, and we are, we're at the discount of this whole leg. I'd be interested in shorts up here, but more so looking for longs down here. Probably get a rejection right here. See if we... Now this would be an okay short opportunity if we hadn't take this liquidity right here already. Tracing this distribution. All right, speed it up a bit. It's about almost 1:30 p.m. Usually start getting some movements there. Yeah, and we did. Yeah, I wouldn't recommend doing any options if you don't have much experience yet, because that's just how you can get eaten up. But like, if you do want to get into options, a good first way to get into them is if you're buying, if you are purchasing SPY ETF, you can start looking into how to sell covered calls. So that's a good way to get into options without losing your skin, because you're essentially selling the upside on whatever you're buying, and if it doesn't get there, then you're capturing the premium, which is an income stream. And then once it does get there, then it would be you'd be selling it there anyways, but you can sell calls on your long positions, and that is a pretty easy way to just get into options without like, I wouldn't really recommend anyone buying options if they don't know much about them, because that's usually how people get screwed over, or they get lured in with just, exorbitant returns, which is fair. We all do, and sometimes they hit. Just depends. But that game is a little bit more advanced for sure, because it's very math oriented. All right. Yeah. All right, we're getting a retracement here back into this little level. Let's switch over to the 15-second chart and see if we see anything that we like. All right, not interested at this first level. Come on, baby. Yep. Yep, but more so selling like covered calls. So just selling out of the money calls. Let's say SPY's trading at 500, but you want to sell it at 600. You could sell $600 calls, a few months out, or you could keep rolling it over every month and just capture that premium until it hits that 600, and that was your target anyways. The out of the money puts is a good way to get into a position, but those are just a little bit more risky. Yeah, covered, yeah, of course. Cash secured and whatnot. Not naked. Alright, we're getting a little bit of an accumulation model happening right here. So look, we're ranging, we took the high. If we take this low, come back up, boom, boom, this would be a reasonable long option. Let's see how this trades. Yeah, the name of the game, or the saying in the options market is that like the winners always are selling premium, because how options are priced is based off of implied volatility, and generally the market prices in higher volatility than actually is actualized, and the volatility increases the premium. So usually if you're a net sell, you're selling options, you're selling that premium. See ya, Egg. I'll talk to you later. I'll be on for a little bit tonight. So usually selling implied volatility is a good way to generate income. All right, we took this low. Let's see if we get a move back up. Let's see this. See that taken. So my exit point is 600. I'm happy with that because I bought a 500. In which case I get the premium. Exactly. Like the only so where would be the negative of that is, say that it just runs up to 700. You forego all of that profit above 600 that you could have gotten on your basis, but you still collect the premium. So that's kind of like the opportunity cost there, is if it goes above the strike that you sold it at before it hits the expiration date, or at expiration. All right, looks like we are going to take this high. I'd like to see a little closure above it. Let's see how this is looking on the 1 minute. Yeah, okay, this is looking decent. If it could swipe this low one more time. But there is a long brewing here, in my opinion. We'll see here. Okay, it's a nice reaction so far. Come on, go up a bit. I want to get another trade in here. Okay, looks like it might want to take it. Yeah, exactly. I mean, that's the whole point. Like, you already made that decision. You already made that plan beforehand. Yeah, that's Yeah, exactly. Selling calls on your long position. If you have like Thinkorswim, if you use like Charles Schwab or TD Ameritrade, which I don't recommend any brokers or anything because it's not financial advice. But Thinkorswim, you can model these out, the payoff diagrams, and it's pretty sophisticated. You can see kind of like how the theoretical price and theoretical value of your options over time as it's getting closer to expiration date. So that's something to look into. And TradingView has options now too. I haven't even looked at it, but so I don't know. But TradingView has an options thing. All right, we took the low again. We just haven't gotten any confirmation to take a long here yet. At least for me, there'd be early opportunities, but this is just internal liquidity right here. Could just go boom, back down. Want to see it take this high. And okay, 2 o'clock has hit. So we just got new candles all across the board. A new 4-hour candle, which did close below its demand. So we could be looking for a bearish retracement upwards. Come on, give me something. Speed it up a little bit. All right, there's the high is taken. Now here's where it's a little tricky. I'm gonna try to run one a little bit more aggressively, but we didn't close above it, and you know, the more conservative play would be to wait for the close, but here I'm just back testing, so yeah, exactly. We can talk about, you know, how all of it works and stuff, but it seems like you got a pretty good understanding of it all, so I think you're in a good boat, my friend. See, options are really, so most of the money in the world is in derivatives, swaps, options, and they're mainly an instrument meant for management and hedging, not necessarily for like asset allocation, like to be used as a proxy to buy stock, you know. And most of the options are being used by institutions and stuff to hedge risk and whatnot. But retail uses it, you know, in much different manner. All right, so we'll try to take this long. Oh shit. And we're gonna cover this low. Damn it, if I could fucking get it. Lock that. All right, let's cover this low. And then just a 1.5 would be here, but let's see where we think. I don't really like the targets up here. I mean, this could be, I think, a home run target. Would be up here to this supply. That would be a nearly a 3-to-1, 3 contracts. So let's do that. 3 contracts at 40. 3 contracts at goodness gracious, I can't move this damn thing. Let's do it right here. 3 contracts at 21.40. Yeah. Apply 3.
Order submitted.
Oh, the turnaround on Bitcoin, damn it. Ah, I missed that long, of course, while I'm freaking streaming. Oh well. Your continuation here on the ES. Alright, let's try to get entered. So would a responsible way to do it be like buy $100 of shares and like $1 in puts in case it dumps that day? I don't know. I mean, you could like if you you could do dollar cost averaging. Let's say, because there's different ways to dollar cost average. You can dollar cost average based on time. You can dollar cost average based on price. You can dollar cost average based on percentage moves. You know, if it goes down 5% in a day, I'll purchase 100 or whatever. But let's say you have like identified levels that you want to purchase at. Yeah, one could sell puts at those levels, and then that way, you just like if you were selling calls, you'd be likely gathering premium until it gets to your level, and then you'd exercise those and you'd buy the position. So that's one way to do it. You know, I guess the issue with that is that you might not ever get any shares, and so you might not have any. You know, if the market just goes up, then you're just collecting premium. If you're putting some into the stock itself, then at least you got the shares. But I thought a bad idea to try to do a little bit of both. I don't really know what would be an optimal percentage to do that, like, but I don't really dollar cost average, to be honest, and yeah, I mean, there's different methods. Like sometimes you could set an alert with your broker that when the price goes down 5%, like in a day, just so you buy just on volatility days, or if it retraces a certain amount from the local high, then you purchase, and then it can be, you know, time based, where it's like every week I'm just gonna put it in no matter what, even if price doesn't do some functionality or behavior that I have seen fit. Alright, let's try to get tagged in here.
Order filled.
Alright, we got filled. Let's hopefully we get a win on this one. Put that in Excel spreadsheet here. NQ long limit, 3 contracts at 21.446.5. Expected exit. We'll go for the home run up here, 21.495. But we'll manage it if it goes up. Original stop, 21.426.5. Alright, let's see if we get a move up here now. Yeah, it's like, say that over the week you didn't have like a reg day that went over like 1% down, so you don't trigger. And a lot of the brokers are sophisticated enough to put this in, to implement it into your DCA strategy. Okay, here we're getting a good move now. Alright, so now we want to be thinking about how are we going to manage this trade. We're on the 15-second here. No need to move our stop loss yet. If we go up, break up, then we'll move to break even. Let's see if we get some continuation here. We're going to expect a little bit of resistance here at this consolidation, right? That would be expected. So probably a little pullback. They're not boring questions. That's why I'm out here. I like talking about this stuff. This is what gets me going. So I appreciate your questions, honestly. Thank you very much. All right, there's our first pullback. Looks like so far we're going to try to fill the imbalance. All right, if we get a move up, if we get a move back up above this high end of supply, I'm moving my stop to below this swing right here, just to mitigate risk. Come on. See, it could come down and continue mitigating. This is why I haven't moved my stop yet. Or it could just come to take me out, and it would be unfortunate because we had 15 points, 12, 13 on excursion. Ooh, that's not looking good right there. That'd be a situation maybe where you just mark it out on that reaction, but we're back testing. We're going to continue going for these one shots. Okay. For sure, if we break this high on break even. This is NinjaTrader. This is one of the, okay, nice. Big move. We're going to go ahead and move our stop to break even. So we got a risk-free entry here. Change that our captured stop is at break even for management purposes. I'm using NinjaTrader because, well, first of all, it's free for most use cases. And you can download market replay data. And so I can get like historical tick by tick data. So it's really good for backtesting. So I can see how old price action happened, and we can just practice, get better, sharpen our skills. All right, let's continue forward. Now let's see what happens. We're in the supply zone, so we could expect another pullback. We're not out of the woodworks here yet. It could come back and stop us out, but at least it'll just be break even. Alright. I'm not going to follow this low if it breaks. I'm going to keep it here, break even. There we go. Good move so far. It is. It's definitely more towards day trading, and that's what we're working on. I mean, we're on the 15-second chart right here. But I use TradingView, you know, for most of my charting stuff, just like natural charting, watch lists, and whatnot. But this I like to use for the trading and scalping. All right, so we're up 23.5 points right now. That's at 20 contracts. That's 1.4K. So that's above our risk target. Puts us positive for the day at the moment if we were to sell out here. But we're not interested in that. We're going to continue up higher. Ooh. Oh, okay. If it breaks that high, I'm moving my stop up. Alright, so now I think I should move my stop to about right here, which is 21.4 459.25. So now, no matter what, we're locking in 13 points. And let's let this one ride here. See if we get to take out this liquidity up there. It could. I mean, this is not fully mitigated here. I mean, this is all is, but this could swipe down here. Boom, boom, but yeah, you can use this live, and I do right now. Like, all I have to do is connect to the data provider that I use for whatever trading platform or broker, and then it'll just play, you know, live throughout the day. But right now we're just doing playback. But like, it'll look the exact same for live data, of course, without the pause and
Stop fill.
All right, so there it came back and stopped us out. We'll see how this plays out a little bit, if it comes back up, if it comes. Was that a good stop location? So it looks like that was a good stop location. So that's good. That's a good win in my book. Good risk management. Yeah, it is. And that's one of the things I like. You want to be able to, like, just drag and move the lines, you know? All right, so let's go ahead and put down the statistics of what happened. Take a picture of it for the statistics in the spreadsheet. That was a pretty decent trade. Not a lot of drawdown, so not bad. Let's see. Execution. So that was a 12-minute trade. One of the longer ones that I've had. The percentage isn't too important with the futures because it's all leveraged. It's more so about the points and the ticks. But I think that was like 15 basis points at the highest from the entry level. But the highest, that was like 24, 25 points. I'm gonna do the math here, but it entered at 214, 0213. So we hadn't taken a trade in 2 hours. Exited at 14.26. Exited on limit. Exit price was 21,459.25. The highest price went before it came back to our stop loss was 21,474.75. So that means, damn, price went up 28 points. And we only captured 14, so we gave back about 50% of the profits. Yeah, here, let me explain it to you. So, let me just make sure I have everything categorized. So it's all about is writing down the statistics. So, all right. So if you look at at the y-axis here with the price, all right. So right now, this black line, or the black ribbon or whatever, it's at 21,449.25. Okay? So right now, I'm using the NQ, or otherwise known as the NASDAQ futures instrument to trade on. And you'll see that if I move up from that ribbon, it goes up 0.25 each time. 0.25, 0.25, 0.25, 0.25. That's called a tick. So that means that every single time, if someone were to buy or sell, price would either move up or down 1 tick from its current price. So it'd either go 1 tick, up, 1 tick down. Now, if I go up 4 ticks, that would be 1 full point. So, because like 4 times 0.25 is 1 point. So just every $1 change, or 1 point change, 1 handle change in from the price is 1 point. And so each contract depending on what you're trading, has a different dollar value associated with it for every point. So in this instance for NQ or NASDAQ, every point is $20. So if I were to go up 10 points, that's $200. And that's with one contract. Now let's say I add on and I'm doing 2 contracts. Well, then you get the picture that that 1 point would then be $40. 3 contracts, 1 point would be $60. And then per tick, 1 tick is $5 because there's 4 ticks in 1 point. So hopefully that makes a little bit of sense. But so for instance, if I was doing, like you were talking about the SPY earlier, well, the futures contract for the SPY is called ES. You can see down here ES. And 1 point for ES is worth $50. And doesn't mean that one's more valuable than the other. It's just that, like, based on volatility, the NASDAQ moves faster anyways. So, you know, 2.5 points on the NASDAQ is equal to roughly 1 point on the ES, because that would be $50 of equivalent value. So that's essentially what the points and stuff mean. And so I can show you can display like the profit and loss by points, percent, ticks, whatever. No, it's not 1% of the total stock price necessarily. All right, so I'm going to give you 3 instruments, all right? Right here is NQ. This is a futures contract, okay? So what the futures contract does is it tracks an index. So the index that the NASDAQ futures contract tracks is the NDX, which is like the NASDAQ 100 or whatever, which is like the top 100 tech companies, and they're all weighted differently based off their market caps in this index. And that's not a tradable instrument, but it's trackable. And then this is technically like a derivative on top of that you could trade. And so you have that, and then you have the triple Qs, like QQQ, which is an ETF, which is what you're familiar with, which is an exchange traded fund, which is traded on the stock exchange. It has a different different notional values, different expense ratios, different stuff like that. The point doesn't involve anything. It's just literally a nominal value. So if the NQ is trading at 21,449.25, if it goes up 1 point, it'll be at 21,450.25. And that 1 point is worth $20. It's kind of confusing because you have to look at NQ. It's a contract. It's not like it's not like a stock or anything. It's a derivative contract. It's only a product that's tracking another product, essentially. So it's like it's meant for leverage and hedging. It's literally called futures. It was created back in the Chicago railroad exchange trading and stuff like that, with grains and cows and whatever to hedge prices or not. No, I know it's hard to explain because there's a lot of moving parts, and it is confusing if you haven't dealt with it before. But in the case of this for trading, you can just imagine if this goes up 1, that's $20 per contract. So like, yeah, essentially, like if I was trading like the ES that I was talking about earlier, it has a different value per point than NQ does, and so does gold, which is GC. They both have different point value, monetary dollar values per point movement. And there's mathematics behind it, but it won't go behind it. So essentially, like, the ES, to calculate the notional value, you multiply like 250 times the index price. So this is where the leverage comes in. So like just imagine that we're trading NQ. It's like we're acting like we're buying the QQQ ETF essentially. No, there is no 1 point value for a stock. 1 point value for a stock is $1. It's just $1 because the value that you get, it's not leveraged. It is what you get. You buy the shares. It's not a leveraged contract. If this, you know, if Apple goes up $1, which would be 1 point, it's $1. It's going to be equivalent to whatever movement it makes. You see? This is a leveraged contract, so the point value is a lot bit higher. Like, and it's all based off of notional value. If you want to learn a little bit more about that, look up notional value to understand kind of like what your purchasing power is in regards to this contract, these instruments. All right, so that was a pretty good trade. Yeah, it's confusing. You'll get it. Just keep, I mean, just ask away and I'll continue. I probably haven't really explained it that well. I mean, shoot, it's still confusing to me, to be honest. And I've been around this for a long time. All right, still don't want to short down here, but we could, this could be another just lower high. 1, 2, 3, 4, and we got one more wave up. But this was a good resistant spot, but we did break this supply, which is nice. So there's a possibility we could maybe look for another long here. We did just shift order flow. This candle on the 1 minute that made the low, the high has been taken out. We could look on the 15-second to see if there's any demand that we come into. But this looks real gross. So not anything I'm interested in here. Yeah, so it's just going to continue down. So nothing there. Let's see if we can find another trade. It's 2:22 p.m. on this session. Ooh, looks like this is going to be it. All right, so this high is pretty strong. It's wicked through the two previous candles, and this order block came down, swept liquidity, mitigate, came back into this order block again. If we could break this high, we could get it maybe another long back up to here. Yeah, no, I totally understand, Bal. And I like explaining it and talking about it, so don't feel like you're grilling me or anything, because you're definitely not. Trust me. That's what it's all about. Ooh, wick. So on the 15-second, that is a closure, but I don't know. That 1 minute wick, the rejection makes me not as interested. I'm not gonna play it because of that. Let's we got a 15-minute candle closure and 30-minute candle closure happening right now. Let's see what happens here on the 15-minute. 15-minute came down wick, closed as a hammer. Semi-bullish. 30-minute is just chopping, barcoding in a range technically right here. Uh-oh. I have to use freaking copyright free music because I'm streaming on YouTube as well right now, so All right, let's see where this goes. It's pulling back. Like I said, I'm not interested in the pullback because of that first 1 minute reaction. So it was a good tell that there were sellers on the limit just sitting right there in supply to push it right back down. Yeah, we did come back up a little bit more, but sometimes those reactions give us a little clue, and that's why we didn't take it. So it looks like we're going lower for now, which is true. We haven't hit this line that I was looking for down here. Let's speed it up a little bit. I'm really not interested in any trades in this range anymore. We can remove that, remove that. It just looks ugly. This does look like it wants to go pshoop, pshoop. But if we get a failed breakdown right here, then we could go up and swipe all this liquidity. So gonna be watching out for that. Okay, we just got a new hourly candle. We got one more hour. It's power hour. We got one more hour in the session. Yeah, that's good. I would just mess around thinking about like volatility or standard deviations or different distribution, skew and kurtosis. Think about some of that stuff. Think about, you know, percentages from swing highs, the rate of change, how much volume, and come up with kind of a system for yourself that makes sense to be more optimized on the way that you're entering from kind of like a dollar cost average perspective. All right, so we got an hourly candle closure. We just swept. We have a 3 drives pattern coming here actually, because if this 15-minute candle comes back up, we got 1, 2, 3 liquidity back up to here. We have an opportunity. I'm saying if we get above this high, we're gonna have another long opportunity. I really think so. And long is still the game. We're no need to be looking for shorts down here, but we have to turn around kind of right around here. Don't want much more digging. Yeah, and that's another way to do it is you can, you know, diversify the amounts that you put based on certain triggers, you know. But of course, just like, you know, like the basic DCA dollar cost averaging is really meant for just like set it and forget it and just build a position. But you're definitely, you know, you sound like someone who wants to optimize and do more, and that's good. So, and I'm someone like that too. I prefer doing it, you know, something like that. Yeah, no worries, man. Thanks for all the questions. It's been a good conversation. All right, I don't like how far we've come down. I'm less interested in this being a failed breakdown now. Oh yeah, okay. We got a 15-minute closure here in this scenario. With 30 minutes left in this trading session day, I would probably be like, there's probably no trades to be had for the rest of this session, and we'd be looking for tomorrow. Be looking for some like any moves up to short. So let's just see how this session ends here. Oh yeah, if you're a programmer, then you're the perfect. Honestly, I feel like programming and stuff like that data science goes hand in hand with trading, because especially if you can be logical and you can build systems, especially systems is the most important part. Building a system that is habitual, reproducible, and measurable, and trackable. That's really the name of the game, and then understanding the probabilities behind it. And I think a lot of programming goes hand in hand with that, especially with just like logical thinking. Now, right here, we're doing a lot of kind of discretionary trading, but we're looking for a lot of the same behavioral functions to act as triggers, but using a little bit of discretion and intuition. And we're only trading price action and market structure. So you see I have no indicators or anything. I'm just trading solely on the candles and structure. So really trying to read the language of the market. So here's it. So that's, let me put the playback button on here so that you guys can see it too. Why can we not see it? Oh, wait, I know why. Alright, so you can see on the playback, we got... Oh, this is trash. Alright, so that would be the end of this day. So overall, on January 7th, for backtesting, had 5 trades, 3 winners, total of $3,105 made January 7th for this session so far. But let's go on to the next day, and I'll do a little bit more. So I'm going to let this play at max speed. I do like to trade the overnight session, so I could backtest it, but I'm trying to just focus on backtesting the New York hours. So get rid of this line, get rid of this line. I'm going to leave that, and we'll let it play through the overnight session here. And just see what transpires overnight and going into London. And I'll be right back real quick. Yeah, it's a lot, but oh, why did I turn the music off? It is a lot, but here, I'll tell you something though. Like, it's easy. Like, don't take the learning path that I've taken, where I've just tried to learn everything, and it's rather confusing. And then you kind of, there's a lot of noise that you put into it. Really, just keep things simple, and just find a system that works for you, and just block everything else out. Because there's so many different ways to be right, but it's really just about making money. All right, so this is London session right here, 2 to 3, kind of when London starts. We had a London reversal taking out the Asia low, and we'll come up. We'll start trading at 8:30. That's usually when big news reports come out, and at least Eastern Standard Time, New York time. Yeah, I think that's reasonable as well. And just, you can always slowly roll, you know, bonds and any type of kind of cash-like instrument into equities and more risk-based assets, risk-on assets, as, you know, the market shows you what you want to see. But, you know, I would say capital preservation is number one. Something that I've had to really work on, and that's kind of eaten me up earlier in my career, was just not being good with the capital preservation. All right, so we got, let's see what the 8:30 candle does here. I don't know if there's any news on this day or not, but all right, so 8:30 has transpired. Now let's take a little bit of a holistic view. This was our day that ended. We had a drop. Here's where we opened. On the open, drop down. Hold on, I need to check my trade over here. Alright, it's okay so far still. And Bitcoin is retracing. Then we came up during Asia session, retraced, and then around midnight came back up, retested. And then, okay, so London didn't take the opening low, it just retraced, took the Asia high. And wow, that was a massive move. So London, and then New York opens up in an hour. Looks like we're retracing London's move here. Then, but if we look at our daily chart here, so we'll go through the higher time frames. All right, so we can see with the daily, we're kind of creating a bull flag here as we're retracing down. Really, the question is, are we going to get one more drive down into this low? It kind of looks like that, but this is a kind of a tricky spot because we did swipe liquidity, but we didn't take the high. So now we could be forming a little bit of a triangle, descending triangle, and who knows if we get this low taken out. We had this buy to sell fractal right here, and we closed heavily down below it. So I would think that any moves up into this blue box could be possible short opportunities, but we did already take yesterday's low, so we could be looking for longs up into this blue box is my prognosis based on the daily. Yeah, that's good. See, at least you allocated your mental allocation, your mental accounting was good by allocating, you know, it as a gambling bucket rather than like, you know, your salary bucket. And that takes a lot of discipline, for sure. All right, so here's the 4-hour chart. Same thing, wicked into this block. It is showing early signs that we could maybe look for a long up into this blue box here. That's the 4-hour. Let's look at the hourly. Oh yeah, okay. Hourly, we get an order flow change right here. So really, at the moment, I'd be wanting to look at us coming back into this candle. We'll put the range tool. Let's see if we can come back into range. But let's check the 30-minute. 30-minute. We are in supply that did break this low, that broke this high. It's just a mini range, but this was supply that we're going to have to take care of. Yeah, well, any amount is enough. I can't tell you how much I've lost before, you know, just making bad decisions. I mean, shoot. I paid my tuition. I've paid my tuition. Sometimes I'm still paying it for sure. Alright, so we've got this flip here. We had a nice rejection out of there for about 30 points. And then we can check our 15-minute chart. That's chilling over here. Same thing, but we did break over this block. Early signs and a change of character here. I would like maybe to retest 50% of that hourly candle into this block here. This would be pretty textbook. Hey, Baltrazi. Thanks for the follow, man. I appreciate it. It's been a great discussion with you tonight, for sure. Alright, so we got that one. Yeah. No worries, Baltrazi. Thanks for dropping in. Come back in. I'm usually trying to hop on a few times every week, so I'll see you next time. And good luck with your investments, my friend. All right, let's let this trade out here for a little bit, see how it does. See if we move up or if we come back down in any retracement here. If we come back below this low, I'll be interested in looking for a long. Otherwise, probably wait till 9:30 in that blue box at least. So let's speed it up a little bit. All right, we are. Oh, wow. Baltrazi with the 15,000 cheers. Thank you, my friend. Salute to you. Salute to you, bud. Much love, man. Thanks for making my night. It goes both ways. Thank you, sir. Alright, looks like we are going to come down and take this low. Here. Good day to be alive. Good day to be alive. Alright, so 9 o'clock just happened. We just got another hourly candle, which is actually important because that was the range. So we did close above that range. Okay. So this is good, actually. Swipe this liquidity here into here. We're looking for a long out of here. It'll be a solid thesis for sure. But it's a little iffy because we're coming up on 9:30, and I don't really like to trade from like 9 to 9:45. All right, we're coming down. And there's 9:30. 9:30 candle open up. We'll slow down the speed. And I guess from here now is just like I said, if we move deck down into here, I guess we could bounce off this wick. It's the top of this order block. But I think a swipe of liquidity back in, boom, boom, up to this blue box. That would be the nice morning trade. So let's see if we get a move down here first.
It's working. One.
It's a little choppy right now. Okay, here we go. All right, here's the move down. It's kind of lining up nicely with the 15-minute candle closure. Okay, all right, let's slow it down here. Let's see. We're in the wick. See if we take this low. Ooh, ooh, ooh. What's it gonna do? Is it gonna double bottom here? It could. There's a chance. Ooh. Hasn't showed us anything yet. Nothing yet. Let's speed it up a little bit. Okay, rejected. This is tough because I like this spot for a long, but we're gonna have to go down to a lower time frame. Ooh. All right, we're gonna close this ES trade.
Order cancelled.
I just think it might come back a little bit. Okay, back to back testing. I don't like this which is mitigating every move up here. Might need to go to the 5 second, see if we see anything. Ah, gross. Yeah, I really want to see this take the low. I don't like the price action that's happened here to get into something, but it might just go up from here. Oh, okay. I'm gonna be a little risky here. Let's take the retest here of a continuation trade. Not my ideal scenario, but we're back testing, so it just goes into the learning bank. Let's lock that. Lock. And let's bring this down. So I'll probably cover this low and then retest this 25% quartile, and then honestly probably we running up to this blue box. It's New York session morning. We've been looking for this long. I'd probably take partials here at the highs. But for entry, if we can get a retest right here on this line, 2 contracts. All right, let's try that. 2 contracts at, call it 21,330. Perfect.
Order submitted.
All right, let's see if it comes back, taps us in. It might not. You never know. Ooh. I'll let it go still for a second.
Order filled.
All right, filled. All right, let's run this up here. 2140. Yeah. That's fine. Stop below this low. The thing is I know it's lower time frame, but because it went there, mitigated here, broke this block, came back down. Look at it as a liquidity sweep, but it would have been nice if it just retraced here, then went boom, and then boom. Okay, well, all right, this is the 8th now of January. NQ long on limit, quantity 2, entry price 21,330, expected exit 21,471. That's a lot, but we'll manage the trade. Original stop 21,306.25. So if this were to play out, it'd be a 6-1. Let's watch it here. I mean, there is a chance it comes back and actually does run that low, and I was, being aggressive here, which is a high possibility. It's looking like it. Yep. GG's. Oop. Was it a good stop loss placement? Too early to tell, was it? Ooh. All right, so that was the kiss of death. But pretty good stop loss placement, I suppose. As of now. Come on. If we break this high, we're moving. Well, I'll move it up a little bit, maybe. But there's 24. There's 25 points already. So at this point, we need to at least cover this low and de-risk. Because we already took some heat, some drawdown on that. So 21. 325.25 is our new captured stop. All right, now this is okay. This is looking good for an impulse.